This is the way it is. He is a super kind, intelligent person, and he is as kind as he is intelligent. And if you know anything about him, you'll know that really means a lot. So thank you for being here, Mr. David Morgan.
Well, Chris, it's good to be back with you. Thanks for having me.
Absolutely. Now, I want to start off and I'll talk about the inflation in the 70s. I wasn't here. I don't know anything about it. I'm doing my best to learn about it. I have been for the last year or so. I actually asked the economic ninja about it. And he said he was on a big wheel. He couldn't help me out any. But so I'm going to set the stage and I want you to kind of help me think through it, because we can learn a lot from the past. And, if we don't learn from history, we're doomed to repeat it. In 1965, inflation was stable for several years, right? It was around 2%. And then President Lyndon Johnson, in 1963 through 69, him and his buddies in Congress started to do this big increases in spending, the war on poverty. Do you remember the war on poverty?
I do.
Okay.
Yes, I do.
And the Vietnam War. So there was two. Yeah. The main takeaway I got from this is they were spending above and beyond what they could or what they should have. So after this, inflation really started to pick up in the late 70s. 78, 79 seemed to be the peak. And it seems like that's where we're at now. We're at really high inflation, and the Fed chair, Jerome Powell, is trying to be like Paul Volcker. He's trying to pull a Paul Volcker and raise interest rates, and this is going to crush the economy. It's like I think I heard Peter Schiff say they're holding the economy underwater until it quits making bubbles, and then they'll try to revive it again with more stimulus, which is probably true. But how is this? The question to you is, how is this the same or not the same? What can we learn from the past, and how can it help us in the future?
All right. Well, I'm going to digress a bit, bring you back, forget the question. But first of all, I want people to know that, first of all, I give my age. I mean, I'll be 70 in January. So I went through the 1970s up to 79, 80. Gold peaked actually on my birthday, believe it or not. I was in the futures market. I was making more money per day in the gold market than I was at work in a week or a month. It was quite exciting. People say, well, you weren't in the silver market. And actually, no, I wasn't. I was more of a gold bug early on. And then after the peak, and I, being somewhat greedy at the time, I'll admit it, I thought, had I put that same amount of a bet in silver rather than in gold, I would have done even much better. So I started to dive into, well, why did the Hunts buy silver? Why didn't the Hunts buy gold? And of course they bought both, but minimal amount of gold versus what they bought in the silver market. So that started my silver study. So I digress to give you a little bit of background. Also wanted to let people know, because I thought about this interview, half the weekend. There was very little credit in the system that was readily available. Let me explain. I mean, you could get credit to get a mortgage, and you could get credit to get a car loan, but that was about it. You had to go to the bank, basically. It was the start of, when I was a youngster, of like the Diners Club card. The Diners Club card. Yeah, it was this plastic card that some restaurants had agreed to. You could give this, this card and have it swiped, and you can buy your dinner, your restaurant meal, and then get billed at the end of the month. But some of the early days, you had no credit. It wasn't really a debit card, but you had to pay the bill within 30 days. And then the bankers caught on real quick that, give them 30, 60, 90, give them revolving credit and on and more. So start off a Diners Club, to the best of my memory. And soon got American Express. And of course, MasterCard, Visa came out, and the game was on. It was like credit in your pocket. You'd already got an agreement with the bank that you could have a credit line of, and pick your number depending on what your income level was and everything else. So that kind of started easy money, you might say. And then going to Johnson did what we called guns and butter. He wanted both. He wanted better, bigger, more expensive social programs for the masses, and also run the Vietnam War. So he wanted guns for the war and butter, giveaways for society, the Great Society, they called it. So that caused a lot of inflation, and people started catching on. And this is way pre-internet, and I thought the story would be kind of interesting to you, Chris, and hopefully your viewers or our viewers as well. There were, no internet. So think about it. There were actually flyers that were circulating, 8.5 by 11 pieces of paper that outlined where this was going to lead eventually, about, unlimited money printing, and that the best thing you could do as a regular person would be to buy silver, because the silver was like almost at the monetary price in the early days. The monetary price of silver is $1.29 per ounce. A silver dollar is 371.25 grains of 999 fine silver, and that equates to 0.77 ounces. Now, I know the Treasury Mint Silver Eagles, it says $1 on it, it's an ounce, and that's because the Treasury doesn't know the true definition of a dollar. But I digress. So the flyers would go around saying, here's what you need to do. You need to inflation-proof yourself, buy silver, buy guns or rare guns, buy classic cars, buy any antiques, but for monetary purposes, save your silver, spend your slugs. And they weren't like all over the street and everywhere. I mean, I just happened to catch one somewhere, somewhere and saw it and read it. And it kind of resonated with me, like, wow, you know what? Yeah, you can't print. And I'd already studied, excuse me, some, monetary history and how the banking system worked and all that stuff. So it just revivified what I'd already learned. So what it was like was we kind of learned to live with it. We realized that the best thing you could do is spend your money now rather than hold on to it. So people were buying a lot of real estate. They were getting loans if they could get loans, spending that. I got the loan from the credit union. And again, I moved into the futures market and made a pretty big bet on gold for my age, my time, and my net worth at that time. And then it continued to the spiral. I've said this before, I'll say it again. I got a cost of living adjustment on my first paycheck in my career job. I'd done other jobs, plenty of other jobs before I got my what I'll call career job. So working in the aircraft industry, working for Rockwell International, my set rate is $6 an hour, and I get my first paycheck after 2 weeks, and it's like $6.20 an hour or something like that. And I'm all, an uptight 22-year-old kid thinking, uh-oh, payroll made a mistake. I'm going to get in trouble, right? So I went over to, I think, my boss and said, I'm not sure what to do here. And he said, see that little box there that says COLA? I said, yeah, cola. Is that Coca-Cola? What is it? No, that's a cost of living adjustment. Rockwell and all the big, conglomerates will adjust your pay based on what the inflation is doing. So it's like, oh, okay. So, inflation was pretty rampant, and I got, an increase in pay without asking for it. And away we go. So I'm belaboring this a bit. So most people caught on, did what I just said, and then it got basically out of control. When Carter came in, after the Great Society experiment and, started deficit spending like crazy, Carter came in and made it even worse. He wasn't perceived as a very strong president, and he really wasn't. I think he had a good heart, but he was being manipulated by the CFR, which was basically pervasive throughout his administration. Everything was kind of picked for him, and he's given guidance on a daily basis. So inflation really started to get scary. People weren't really sure what to do. And gold and silver took off at the end of it as inflation got to about 13% on the official measurements. And then Volcker came in. So I want to digress a bit more because, again, I thought about this great deal, Chris. So when I bought my second house, I bought the mortgage. So the mortgage was, I think the mortgage was around 50,000, and it had been paid down like to 48,000 or something. So there's ways. I don't know if you can still do this or not, but I bought the mortgage from the people that owned that, so I was able to get an 8.5% loan rather than at the time a 10% loan. because, I knew enough about money and interest rates that if I paid this person bonus, you might say, to buy his loan out from under him and keep that same loan on the house I was buying, in the long run, it'd save me a ton of money because I'm paying 8.5% for the money instead of like 10.5%. So that was like a good loan. Now, what are our mortgages at, 6% or something? So,
Yeah, they're about to go up some more, but yeah,
yeah,
they're
but I'm just putting it in context, depending on what the inflation rate is, it's relative what's a good or a low mortgage compared to, the zero interest rate policy that we've had for so long. So Volcker came in and he put interest rates up to, 18%, 20%, somewhere in that range. And it just absolutely devastated the market. Now, the point to make on all of this is that inflation was 13% officially. He put interest rates 5, 6, 7 points above that. And that was the only way to kill inflation. The only way was to get a real, honest to God return on money at loan or at risk. Or
okay. Can I stop you just for a second?
sure.
So the CPI back then was calculated different than it is now, correct?
Correct.
So would you say our inflation now is probably considered about the same?
Now, let me interrupt you because I have an exact answer for your listeners,
Okay.
our viewers. So there's a gentleman called John Williams who runs a website called shadowstats.com. And he has for years calculated the real inflation rate basis the 1980 metrics. And if you look at his website, I haven't for a while, but last time I checked, it was at 18%. So if we compare apples to apples, we had 13% in 1980, and we've got 18% in 2022, but we say it's only 8.5 because they recalculated. So there's your answer.
Yeah, it's a cherry pick basket of goods. That's an absolute lie.
Yeah, and the two things humans need most, food and energy, aren't in the calculation. Figure that one out.
Yeah.
So Volcker came in and just squashed it. And I was overeducated. I've said this in other interviews because I knew that when you push interest rates that high, that it's not a question of return on your money. It's a question on the value of the money. In other words, this is mafia money interest rates, in the federal government. And that was a precursor in some cases for a failure. I mean, you look at Argentina right now, they have 100% inflation and their interest rates are 75%. Well, who wouldn't want to get 75% on their money if and only if that money has value at the end of the day? So with kind of a scenario like that, where I was thinking at that time, this was not going to work. I thought it would fail. And that was early on. I mean, obviously I'm a quick learner and I discovered I was wrong and the government was right. And, my thesis was invalid under those conditions. The next time, there's no way that we can push interest rates above the purportedly official inflation rate of 8.5% or the true one of 18. Just think if we had to push interest rates to 18%, there's no way you could pay off the interest. You could make the interest payment on the national debt. That's like your credit card. I mean, you spend, you get another one, spend, and all of a sudden you're at a point where you don't make enough income to just pay the interest payment that's required on your credit cards. That would be the scenario if we went to, a high enough interest rate to be above inflation. It's not going to happen.
It would also affect all the people that are retired. The COLA thing. Everybody that was on government assistance would have to get a raise.
Right.
That doesn't include medical, and I mean it would really, really devastate. But with that being said, they're consistently bringing interest rates up. I kind of feel like they're going to chicken out, and pivot. But
I want to answer that. I mean, everyone, there's one expression you've heard me say, maybe if you watch one of the videos, when everybody's thinking the same, nobody's thinking very much. Now, I'm not saying I have the right answer, okay, but I've certainly thought about it. And I'm in the camp that they will pivot, but I think it'll be later than sooner. Going back to what you said about Peter Schiff, I think they'll keep raising rates until something breaks. Or my scenario is, excuse me, they'll keep raising rates until the new system is implemented. So the idea is we'll pretend that this US dollar is the reserve currency, even though all currencies are failing against what? Against the dollar. So it's a race to the bottom. People are, why is the Argentine peso going down so fast? Because they're printing it faster than the US is printing US dollars. And most of the debt the third world owes us is in US based money. So they got to print a bunch of pesos to convert it to a dollar to pay back the loan that they owe the bankers, will say. So this spiral will continue and the dollar will continue to get stronger and stronger until it fails. So I think that's part of the thinking. Continue interest rates high, keep all the suckers buying dollars, take all the money that's in other currencies moving into the US dollar, make it stronger and stronger. And that way they will have the basis to convert over to the new system, central bank digital currency, the Fed coin or whatever you want to call it. And that's sooner than later. And again, Chris, I know I keep saying the same thing, but I put a lot of thought into this interview more than most. I want people to go to my Twitter feed at silverguru22 and look at Crypto Conspiracy number 24. I posted on the Twitter, so even if you don't have a Twitter account, you can go there at silverguru22, Crypto Conspiracy 24. I do a very deep dive on where the Federal Reserve System is being pushed as soon as November of this year. Now, November of this year is only a couple months away, and it's a precursor to the absolute digital control system. But it's a nice transition where they're going to basically force, or let's say nudge strongly, most U.S. citizens into that new system. So I wanted to get that out for everybody.
Absolutely. And if you know anything about David's deep dives, they are deep. I think I've got your book right up there on that gray box. And I think you said you had about a penny an hour. It's what you get paid for.
Yeah, something like that.
There's a lot of research and a lot of time that goes into that stuff. So y'all go check it out. It will be good. Talking about the money and the new system that's coming, I've been really trying to think through that a lot. And just yesterday, for anybody that saw my video about PayPal doing their $2,500 fine if you get caught or doing things on social media that they don't like, that they deem, that's the problem, is they deem it as misinformation or disinformation or, all those other words that the socialist people like to talk about. They have now recanted. I don't know if you know anything about this, but they came out and they said, "Hey, if you do something we don't like on social media, we can debit your account $2,500." Well, as soon as they did that, I made the video, and the video wasn't out an hour, and people in the comments were, "I'm out. I'm done." They were unsubscribed, got out. I mean, and I'm sure that's what was happening. So PayPal came out and crawfished and said, "Hey, wait, we didn't mean it. We didn't really mean what we said." So they showed their hand at the poker table. They didn't win, and they picked their hand back up and said, "No, I was just playing." You know, but you hear stories of this every day, and it has to do with money. People going to the bank and they can't get money. I had one lady I met at the Silver Symposium where I met you for the first time. She was trying to give to a startup company, invest in a startup company, and the bank told her she could not. Keep in mind, the startup company was a gold and silver backed crypto. They shut her down. They're making it harder and harder to use your own currency. And does it seem like that's the push? That is the push to the CBDC?
Yeah, partly. That's part of it. But let me correct you. It's your money. That's what we all believe, but it's really not. I've done many interviews. In fact, I got 2 million views on my interview with Daniela Cambone on the bail-ins. Once you deposit your money into their bank, technically it's their money, not yours. You become an unsecured creditor. So even though they want you to believe it's your money, they want you to believe it's safe, they want you to continue banking with them. So they're going to mislead you into thinking all those thoughts. But the truth of the matter is, if we have a financial crisis in any given bank, they have the ability at law to go ahead and confiscate or to basically take their money from you. And of course, just like in the 30s, it really wasn't confiscated. They paid you something for the gold when you turned it in. $20 an ounce approximately. They will give you stock in the bank. Problem with going from $100,000 account that they take and then giving you stock in the bank is usually the return on the stock is about 5 cents on the dollar. So this is what happened in Cyprus. It's basically a bail-in, not a bailout. So I just want to make that very clear to people. I mean, I've kind of changed my statement. I mean, well, the thought hasn't changed, and the truth hasn't changed. But I decided to say, how can I say this differently where people get it? Because, you know, some people don't get it. And I want everyone to at least understand it. So I started using the phrase, there's two types of money. There's debt-free money and there's debt-based money. Debt-based money is fiat backed by nothing other than the banker's hot air and the government's ability to put a gun to your head. Debt-free money is gold and silver where you actually have total control. If everybody used gold and silver coins in their commerce as it used to be, then you'd be your own bank. In other words, your savings would be your bank account, which now your savings is a digital form in somebody's computer called your bank or your brokerage account, and it's controlled by them, not by you. So debt-free money or debt-based money, remember, debt-based money has failed 100% of the time. So there's a very good incentive to understand. So I suggest people save in debt-free money, gold and silver, and spend the banknotes. And also spending physical cash really puts a wrench into the system because they want to go to a cashless society. The only way they could control everything to the nth degree is by having no physical form of money whatsoever, which means no cash. Everything's got to be done electronically where they can trace it, track it, and tax it.
Okay, so that leads me to the second part of our interview. And it's about silver and mainly silver and what's going on with it. And silver and gold. Let's just cover precious metals in general. So a while back, I don't remember, it was maybe a year and it's over a year ago. Basel III, you know, they made gold a tier 1 asset. That to me was like, hey, this is it. This is when gold's going to find its place. And it was a nothing burger. It didn't do anything for the price of gold. And that's question number one. Why was Basel III nothing? Why did the what is going to do something for gold and silver to make the price appreciate to where it should be?
Well, I'm going to check you on that. I think it's been moved back. When does BASCL 3 go into effect? January 1st, 2023 is when it goes into effect.
Oh, so it was announced. It was announced in.
Okay. Following a 1-year deferral to increase the operational capacity of banks and supervisors to respond to COVID, these reforms will take effect from January 2023 and will be phased in over 5 years. That's what I'm reading straight off from them.
So that it hasn't happened. It was only announced.
Correct.
Well, then I was wrong.
No, well, but I want to add on to it. The best sources that I have, and this one I've read it. I'm not certain what it means. I mean, what it means is gold is as good as printed cash. Okay. Wow. We already know that. But what it's the best sources that I have, Chris, have said that it will close down a lot of trading desks at a lot of banks. So it will consolidate it. And that's not necessarily what you want. I mean, to be anti-fragile, you want a diverse population, a diverse economic base. You want people growing apples, oranges, you know, berries, cherries. You don't want just apples, right? And so if they consolidate it more and more, it means it's more and more subject to failure and puts more and more power into, one central authority. So I'm still of the belief, or it's a study, that it will be something of a nothing burger. But I also think it will consolidate the industry, and it remains to be determined. I mean, I'm a pretty open-minded guy. I've certainly not got every call right in the silver market. Everyone knows that. I admit it. But I think there could be some repercussions, but I don't think it's going to instantly, as many of our peer groups say, gold's going to skyrocket because they have to revalue it and they're going to have to get rid of all the paper gold and all that. And that's not really true. Not if you read it. But it will, again, be less advantageous to the trading desks. Look, these trading desks don't make that much on the spread. I mean, they do and they don't. They make tons of money relative to your and I's income. But as far as what they make in the bond market or the credit markets or the mortgage markets, gold means practically nothing to them. So they're pretty happy to close down and quit paying these guys these high salaries to work the desk at a bank for gold than put them to better use, make more money by getting in the bond market. So that's my answer.
Okay. And the countries that are doing business outside of the petrodollar, this is the biggest thing that's happened to the dollar in my lifetime, I would say. You've got the BRICS people trying to come up with their own reserve currency, and they're already doing business outside of Saudi Arabia. Henry Kissinger, what he did in '74, he went over there and made a deal with the Saudis, and now they're starting to use other currencies. It seems like that should have been a real eye opener for most people as the inflation sets in and what to do with their money. And just so you know, I guess I'm trying to run down. We have more people getting into precious metals every day than I've ever noticed. It's unreal. And the price is going down. Usually when the price is going down, people don't really like to buy things when they're cheap. They'd rather buy them when they're going up.
Right. But
this is really happening. And now our inventory, we're 45 days out on some things. It's really happening, and the price is still falling out as all this information is coming out. When do they run out of paper to sell? Can the Fed print up enough money to buy everything as it comes down? How do you get what I'm saying? I made a mess of that, but do you understand what I'm trying to say?
Well, I think the spread between, the paper price and the physical price continues to widen. And I think the more important place to look is like when we look at the CPI and the PPI. If you look at the producer price index, you get a better feel for what's really going on than the consumer price index. Here, it's better to look at what the wholesalers are paying rather than what the retail pays, although that's important. That's what you and I pay for it. But the wholesale price has gone up. And that indicates to me that it's not just a silver coin, silver bar, silver retail investment demand that's driving the price, which it is. It's also that they're so small on inventory that the wholesalers that sell to the retailers are upping their prices. So that's a strong indication that things are very tight, Chris. And, no one will be happier to see the COMEX break than yours truly. And people go, well, wait a minute, it will be difficult for hedging. But people say, well, you couldn't do it or whatever. I want to remind people that the egg market, eggs that we have for breakfast, that used to be in the futures industry. It's gone. Milk was as well. And neither one of those commodities have gone away. We just go what we call cash market. In other words, there is no futures market. You just pay the going rate. Eggs have gone up, what? I don't know what. 100%? I don't know. I know they've gone up substantially, but so you can go to a cash only market, which would be fair because then you're in basically the physical reality only. You're not going to be playing what is the price of silver in the future or what are interest rates going to do. You're saying, I need silver. I want to buy it for my industry. I want silver to save with, want it for my savings. So.
Right. And this kind of leads me to thinking about mining. Is this a good time to start looking at them, you think? Just kind of start.
Oh, yeah. The most unloved sector in the whole stock market is the mining shares. And if you adjust it for inflation, they're at something like a 70-year low. So if you want to buy low, now's a good time. And are they going lower? Yeah, it could, especially some issues because of tax loss selling. Remember, I mean, when Silver Squeeze started with the Wall Street Silver Crowd, which is thank you, all of you, we are at a lot of people that bought silver at 28 because it stayed around 28 for quite some time, and there was still like a $4 or $5 premium even in those days. So there were people buying shares at the time as well. So there's a fair amount of what we call overhang, which means people that are sitting on a loss that will sell for tax loss reasons at the end of the year. So they could go down, but I would say get in now, not with everything, just start to accumulate it and then be prepared. I think there'll be a day, and I say think, I don't know, but I saw it in the 70s, early 80s, where people that are late to the party decide that they're not going to miss, FOMO. We didn't have that expression back then, but fear of missing out. So people that hadn't bought gold or silver got the stocks. In fact, I got a quick story. I haven't told this story in years. So I was carpooling, going down to the aircraft factory, and I was pretty young still. And one of the older guys was in my carpool was named Phil. I won't give his last name. And Phil finally heard enough of me, and he buys gold. And he bought it right around 300. So it moved quite a bit to get to 300. And then it got to the top, and he sold and bought T-bills. Best move you can make. You get that 18% from the federal government. So he did the right thing. I didn't. I sold my gold, or not all. Sold some of it very near the top. But he was interested in gold mining shares because that's where the leverage was. Because people that missed out on gold had stock accounts. So anything with gold or whatever in the name. So in those days, the American Stock Exchange was, fine print, but, about that big. I mean, there was just not that many stocks. You could read the whole thing in probably 15 minutes, just looking at the stock and the stock symbol and the high-low. Golden Knight. So he buys Golden Knight. Stock doubles. It's golden, right? It's got gold in the name. Golden Knight. It's got to be gold mine. It's got to be something gold. It was a women's lingerie company, but everybody else was buying it because it had gold in the name. So that's the kind of feeding frenzy you get at the end of the market. And that was in 1979. This time around, people say, well, that won't happen because the internet, I'll be able to do my own research. Not true. In fact, it'll be greater. People that don't want to buy gold at 3,000 will buy a gold stock for 12 cents and watch it go to $1.20 in a week. I mean, that's the kind of moves you can see when this gets into a panic market. So I think there's going to be a lot to be made in paper that you would want to probably convert into real something. You convert it into metal or buy out a business or pay off your loans or get another car or get, whatever. How free market is. But the idea is that if you think the run to gold is going to move the market, and it will, you have seen nothing to the Johnny come latelys that'll move into the gold stock space. I think it'll be one for the record books. And that's my belief. It remains to be determined. We could see something else, but if I think back to the 70s, how few people traded stocks versus now, almost everybody's mother-in-law's cat has got some kind of electronic trading account. They not only have $1,000 in it or whatever, but there's something there. And when the panic starts, that the run to gold is beyond belief, and everybody sees it for what it is, which will only be about 2 or 3 times what the population is now, which is about 1% that actually understand what's going on, fully enough to take action. And there's a lot of onlookers, Chris, that watch your show will never take action. It's entertainment purposes. But the people that watch your show and actually buy physical metal, that's a very small percentage. But that percentage will go from, the 1% it is now in the gold market to 3%. So think about having, 3 times the demand for real estate. You think it gets pushed up with just a marginal, 10% more real estate investors moving the prices sky high. Just think when you have 300% moving into the gold market. And if they can't get gold or don't want to buy it because it's too high, they'll move to silver, and then silver could get away from them. And they'll say, well, where's that cheap silver stock? Oh, yeah, Silver Knight. Oh, that's got to be a silver company. Let me buy it. So.
Well, that's exactly what happened in the crypto market. When Elon Musk came out and touted Dogecoin, which is absolutely fiat of fiat. It's like inflationary as it gets. They started coming out with smaller, little tiny cryptos that had Elon Mars coin, Elon Balls coin. I mean, it was just, any kind of trending word that somebody thought they could get rich off of. People were buying these small coins that are just history now. It's gone. I think you're exactly right. When people start moving into something actual, physical, hard assets that have protected wealth of everybody through history, they're going to run to mining stocks when it's gone. I can't see it any other way. The problem I have is I've been sitting on it for so long. Is at some point you're so early, you're wrong. It seems like, I was really early, and now a lot of my mining stock portfolio is almost half of what it was. I mean, we're getting beat up, but I'm not discouraged from buying more. I see it as an opportunity to really rack up towards the bottom. So
I would just ask you for our next one, if you don't mind, and we might set up a live stream. I think that getting your audience to ask me questions or ask us questions might be very useful to some people. I'll just give you a couple that I get, all the time. What's the best way to start? I think the best way to start is with what we call constitutional silver. Junk silver in a trade. You're buying a bag of dimes will serve you better than buying a silver bar, because in a silver bar, you've got to make one transaction back to fiat if you choose to do so. And you got to be right. Whereas if you have a bag of dimes, it's the same amount of weight, then you can spend it a dime at a time, so to speak. So always start with coins. That would be number one. Number two is there's more to life than honest money. Some people get so obsessed about it that's everything they think about 24/7. That's my job. You don't have to do that. I'll do it for you. And then lastly, look for a solution. And part of the solution just has to do with something as arcane or intangible as your attitude. If you've got an attitude of gratitude, remember gratefulness comes from two words really. It's great and fullness. And when you're full of energy or full of life or full of light, or you're fulfilled because you have enough, you are grateful. So I want people to bear in mind that we have a lot to be grateful for, even this country that's gone awry. It's certainly it's not practicing the principles that we were founded on at all, in my view. Nonetheless, that doesn't need to affect you directly. In fact, you can do just the opposite. You can be out there on the street, all your daily encounters, be grateful, pass it on. And when, the pay it forward idea, which I really like, doesn't necessarily mean pay it forward in physical cash. You can just pay it forward in a good attitude and go about your day. So a little philosophical, I am, you know me, but that's how I wanted to end it, Chris. And I look forward to being with you in any way, shape, or form, but I would suggest a live stream somewhere along the path.
that will be the very next thing. So everybody, thank you for hitting the like button. Join us in our next live stream. It won't be that long from now. I'd like to do it next week, maybe. So thanks for coming on, brother. I will catch you in the next one. Later.
Later.